Okay. Average guy finance football analogy?
Football, no, yeah.
Okay, all right. Go.
All right, guys, welcome to Average Guy Finance again. I'm Vic.
I'm Darren.
Okay, so we wanted to basically, there's a lot of new people that got into the stock market in 2020, right?
Mm-hmm.
Okay, so I thought that we had a kind of a fun idea that if we used like a soccer analogy, like if we made an 11-a-side soccer team with the stocks, okay, and I guess we can make in another video we can make a good team, but for this video I think we decided to have some fun and we decided to make the worst team possible.
The worst.
Okay.
Yeah.
And this is like basically what we came up with.
Okay.
So like the reason I came up with this idea is like, do you remember the 2020 World Cup? No. So the 2010 World Cup.
I don't remember that.
Okay,
no.
yes.
Okay.
You're not a soccer fan. Okay, but all right. So in 2010 World Cup, someone thought it was a good idea to let Diego Maradona manage Argentina.
I know Diego Maradona. I know he was great back in the 80s. Probably the best player in the world at one time, right?
Yes.
Okay.
But as it turns out, great players don't always make great managers.
Okay. So they let him coach based on meritocracy? No, I wouldn't even call it meritocracy. Because he...
Prestige,
I
I guess. He's like, well, he must know something, right? It was like, okay, but so basically, it was like I really like the analogy because basically Diego Maradona had the mindset. It's like, well, you just stack your team with all-out attack,
which is what a lot of investors do, right?
Yes.
Okay, all right.
Because everyone's like, yeah, we want the hot tech stocks, we want the high flyers, we don't want the boring like defensive stuff.
We don't want the stocks that are going to grind nicely over 20 years. We want things that are going to be explosive.
Yeah, and stuff that's being explosive now.
Right.
Okay, like right now it's going up.
Okay.
And that's what everyone kind of gets excited about, right?
Right.
But you can't do that because like you're gonna get. Well, we'll see. Okay, so it was interesting. So Argentina is they're a powerhouse soccer power, right? Mm-hmm. But they almost didn't even qualify for the 2010 World Cup. So when they were going through qualifying, they lost to Colombia, they lost to Paraguay, and you think, okay, well those are decent teams, I can see that happening. But then they lost 6-1 to Bolivia.
Okay.
And it was like that.
I'm not even a soccer fan, and I know that Bolivia.
Yeah, that should be basically impossible for Argentina to do that, but they did. Mm-hmm. And then they had to beat Peru in order to qualify. Okay. So now we get to the World Cup, and so far it goes okay. So I mean, the first 4 games in the first round, they went 1-0 over Nigeria, 4-1 over South Korea. That's good.
Okay.
2-0 over Greece.
Okay.
And then they went to the round of 16 and they won 3-1 over Mexico.
Well, that's not bad.
That's okay. So we're doing good so far.
Right. Round of 16, I know that's...
Yeah. So then they had to go to the quarterfinals and they ran into Germany.
Okay.
So Germany's basically just like a defensive counterattack machine. Mm-hmm. Okay, and they have just like the complete different mindset. And Germany's basically... They have a great attacking players, but they always have great keepers, great defenders, great defensive midfielders.
You could say that they build off of that. Okay.
And it's like their approach basically makes their attackers very good.
I see.
Yes.
Okay. All right.
So I remember watching that game, Argentina and Germany, and basically Germany scored within the 3 minutes. Within the first 3 minutes, Germany was already up 1-0.
Okay.
And I'm thinking, okay, this game's over. There's no chance that and basically you can see what Maradona was doing. He was like, okay, I gotta double down. I gotta go even more all out attack.
Okay.
And he basically, and that's kind of the analogy that people have with the stock. He's like, well, I have my high flying stocks, and if they dip, I gotta double down. I gotta buy the dip.
Okay.
Right. And so that's what Maradona was doing. He was like, okay, I'm down, so I gotta put even more attackers on, and it just made things worse.
Right.
And they end up losing 4-0.
Wow. Okay.
And in soccer, 4-0 is
soccer. Yeah,
that's an annihilation, basically.
We could do another one of these videos, maybe relating it for American viewers about the same sort of thing happening in football, because it happens, right, where people just lose, they don't pay attention to what they should be paying attention, what they should be we'll jump cut there.
Yeah.
What they should be, they don't pay attention to what they should be paying attention to.
Yeah, you have to have a strategy to begin with, and you got to stick to your strategy. Like you don't want to panic, and you want to have and Germany doesn't panic.
Right.
It's like they know exactly what they're going to be doing. They know exactly what their team is, and they just execute over and over and over again. And that's why they've won, I don't know, 6 World Cups or something like that. So,
yeah, right.
And so the point that we want to make with this video is so maybe an all-out attack works for a little bit, but as soon as you run into a little bit of volatility, and the market crashes, okay?
Right.
If you're all-out attack, you're going to get crushed, okay? And then you'll see how this goes.
Okay.
So let's get into it.
Okay. All right. Let's get into it.
Okay, so we designed a team, and then we saw basically just going by how people have been structuring their portfolios. Like a lot of retail investors, a lot of new people coming into the market, and also a lot of these YouTube guys.
Yeah,
Yeah, so a lot of these YouTube guys, they're trying to, they're pushing these high-flying tech stocks, and whatever's basically exciting. Because, maybe...
Well, that's what the average person is into. Somebody who's just kind of absorbing the stock market passively, right, with the news that they get from their phones or whatever, is seeing certain stocks that are always in the headlines, right? So that's but those stocks are not necessarily good.
Yeah, and so let's go over our team. Okay, so how do first of all, let's start with our attacking midfield. Okay, so we got Nikola Motors.
Okay.
So Nikola Motors, they specialize in electric and hydrogen powered trucks. Okay, so let's go. Their numbers is in the last 12 months they earned $95,000 in revenue.
Hold on a second. Okay, what exchange are they listed on?
New York Stock Exchange.
So this is a company on the New York Stock Exchange that their revenue was how much?
$95,000.
$95,000. I drive a truck. Vic drives a bus. We made more than $95,000 last year. Yeah. Okay, all right. Okay.
And so they made $95,000 revenue, but their net loss was $385 million.
Holy shit.
Okay.
So why was this stock highly touted? What was the hype around this stock?
Well, they're making electric vehicles. So everyone's like, oh, well, the electric vehicles are the future, so I want to be in electric vehicles. And then all these YouTube guys, we're going to make videos about electric vehicle stocks, and then we're going to pump those. And everyone gets into the stock market. They're like, well, I want to get into the stock market. What should I buy? And they go on YouTube, and they watch these videos, and everyone's talking about electric vehicles. So everyone wants to buy electric vehicles.
Okay, so playing devil's advocate here, just as an aside, just because that stock did not so well during the last little while, would that be something to hold on to long term because of their plan?
No. Well, let's see.
Okay, all right.
Okay, well, so Nikola Motors has a market cap of $5.5 billion.
Okay.
That basically means whoever whoever's buying into Nikola values the company at $5.5 billion.
Okay.
Even though they only made $95,000. Okay. But since June 2020, their share price is down 85%.
Wow.
So if you bought Nikola Motors at the top, you're down 85%.
Okay.
And so you have to ask yourself, are you going to be like Maradona, and are you going to double down on Nikola Motors?
I would not do that.
That's a good strategy.
Okay, all right.
We will get. Okay, so reason why.
Remember, I'm the moron here. Yeah.
Okay. So Nikola Motors, they got a lawsuit against them because, quote, they had an intricate fraud built on dozens of lies.
Oh my God.
Okay, so here's what happened. Okay, so there was a lawsuit. Okay, basically, they had a deal with General Motors to make electric trucks. But it got found out that they were doing a demo video, and then basically what they did is they towed the truck up a hill put it in neutral, and then just filmed it rolling down the hill.
Ooh.
So their truck didn't actually work.
Okay.
So that was in a lawsuit, and the company does not dispute that they did this. So all they're saying is like, well, actually, we never stated that the truck was driving under its own propulsion in the video. Because they're basically trying to weasel their way out of the fact that they just lied to everyone.
Right.
So you don't want to be involved in a company that's just like flat out just lying to you.
No.
Yeah.
And where did you have them on the soccer field?
Attacking midfield.
Attacking midfield. All right.
Okay.
Yeah. All right.
So that's now we got another attacking midfield. The pair of attacking midfielders is Lordstown Motors.
Okay.
Have you heard of Lordstown?
No, I haven't.
Okay, so Lordstown's in Ohio.
Okay.
And they make electric pickup trucks for commercial fleets, or they try to anyway.
Okay.
So in the last 12 months, they had 0 in revenue, and they had a net loss of $100 million.
Ooh, I know if I lost $100 million, nobody would be investing in me.
Yeah, well, you don't have 100 million to start with, so I was like, okay, but their market cap is $2 billion.
Okay.
And since February 2021, so since last month, their share price is down 63%.
Okay.
Okay, do you know why? Because they have a lawsuit against them that said that Lordstown claimed to have pre-orders already lined up, but this was false. So basically they were going around the market saying, oh yeah, all these companies are already lined up to buy all our trucks.
Huh.
And it was just a complete lie.
Okay.
And so they did a test run of their pickup truck, and it resulted in the truck bursting into flames within 10 minutes. So
That's not good.
So right off our bat, we got huge problems in our midfield.
Okay.
That,
we have one company that's
we got one company that's a complete fraud, and the other company that's a complete scam. I don't know.
It's would you relate the midfield to the core? Like it's
an important part of the team.
All right.
So right out, we got huge.
One's on fire, one's a liar.
Yeah.
Okay. All right.
Yeah.
That's not good. Not good.
Okay, so let's move on. At right wing,
Okay.
we decided to go with Lucid Motors.
Okay. Lucid. I like that already. I like
It's
the
a
name.
cool sounding
Lucid.
name.
Yeah,
Yes, of
right.
course. Yeah. So Lucid Motors, they're trying to make high-end electrical vehicles.
Okay. All right.
Yeah. Okay. So they merged with something called Churchill Capital,
Okay.
and that's a special purpose acquisition company. So we'll get into that later.
All right.
In the last 12 months, Lucid had, again, 0 in revenue,
Okay.
$0 in revenue, and they had a net loss of $3.8 million.
Well, that's not as bad as the other guys, right?
Yeah.
Or,
We're not as bad, but we're not going in the direction we want to be going into. Right?
you don't want a team where a player's not performing well, but then they point at somebody else on the team and go, "Oh, look at that guy over there."
Yeah,
no.
that's not a championship caliber kind of team, right?
No.
Okay, but yet their market cap is $6 billion. But in the last couple of months, since February 2021, their shares are also down 65%.
Okay.
Okay, so Lucid Motors, they do have a prototype. They have a car, and it actually does work, so that's a plus, I guess.
Okay.
But they have no factory as of yet, and they have no production.
Mm-hmm.
So it's incredibly risky, because there's nothing going on. They're not making any vehicles. They're not selling any vehicles. It's just basically maybe this thing is going to work.
Maybe it's gonna work.
Yeah.
Okay.
And so did you know what a SPAC, a special purpose acquisition company? Do you?
No.
Okay.
I don't know
So
what that means.
it's kind of like it's a hot new thing now.
Okay.
That's happening. So basically, a special acquisition company is they're called blank check companies. So basically, what you do is if you're an investor, you put your money in a SPAC,
Okay.
and that SPAC, it's run by a manager, and that manager is going to go out, use the investor money, and they're going to buy a private company and bring that company public,
Okay.
right? It's basically listed on the public stock exchange.
Mm-hmm.
But the problem is you as an investor, you don't know what company the manager is going to buy.
Okay.
So first, I don't even know why you would do that, because if you imagine doing that, it's you're going to put your money into you're basically relying on whoever the manager is.
Mm-hmm.
And you're going to rely on that manager picking a good company.
Okay.
So in this case, Churchill Capital decided to buy Lucid Motors and bring Lucid Motors public.
Okay.
But they aren't making any cars right now. So it's kind of like if you put your money into Churchill Capital, you got a car company.
Okay.
That's what you end up with.
Mm-hmm.
And to kind of put it in perspective, like all sorts of people are getting into SPACs.
Okay.
So did you know that Alex Rodriguez has a SPAC? He started the SPAC.
No, I didn't know that. But,
So it's like, would you want Alex Rodriguez managing your money?
No.
I mean, there's way better people.
I mean, people seem to love Alex Rodriguez, like love him, but yeah, no, I wouldn't.
I mean, he's a good baseball player.
Well, I mean,
steroid assisted.
he's
Yeah,
juice to the gills.
Yeah.
But everyone's forgiven him.
Yeah.
Yeah. No one seems to care, but yeah.
Yeah.
Uh-huh.
Kind of a loose cannon too, if you think about it. Like it's
Well, when I see something like that, I see con artist. Just someone I don't want to be anywhere near.
He's not a Warren Buffett. Let's
No.
Yeah.
No.
Okay. So that's our right winger, Lucid Motors.
Yeah.
Okay, so let's move on. We got left wing. Left wing, we got Neo Motors.
Okay.
So Neo Motors, they make electric vehicles and they're based in China.
Okay.
And so what's nice about Neo Motors is that they do have cars and they work.
Mm-hmm.
So we're getting in the right direction here.
Okay.
And they're selling cars.
So far, we don't have anyone who's got anything that works, right?
Yeah. So So and Neo, they also do like battery swapping. So their strategy is like instead of charging the battery, you're going to go to a facility and you're just going to swap the battery out.
Okay.
Okay. So
Wait, hold on a second though. But you have to charge your battery often, don't you? If you have an electric vehicle, or
well, in China, I guess like the thing is like there's not, depending on where you live, like there might not be an easy way for you to charge the battery.
okay.
So this is the way they just do it. They just you just go to the shop, they quickly swap the battery out.
Sure.
But I mean, the point is like they do make money.
Okay.
So like they in the last 12 months they've made 16.2 billion in revenue, but that's in Chinese yen.
Okay.
Okay, but they had a net loss of 5.3 billion.
Okay.
Okay, so we're heading in the right direction where we do have revenue coming in,
Mm-hmm.
but we're not making a profit yet.
Okay.
Okay, so
Right.
I mean, okay, so we're it's good. We're getting some sales, but the sales aren't enough to actually turn a profit yet. Okay.
Right.
And Neo Motors, so they have a market cap of $56 billion US dollars, but their shares since February 2021 have been down 46%.
Hey.
Yeah.
Okay, that's not good.
No. So the good thing about Neo is that they have revenue, they're selling cars, and they have support from the Chinese government.
Mm-hmm.
But again, the problem with that is that support might not be there in another week or a month.
Because it's the Chinese government.
Yes.
Okay.
So you know about Alibaba, right?
I know Alibaba, yeah.
Yeah. So the CEO of Alibaba is Jack Ma.
Yes.
And Jack Ma wanted to start a financial company called Ant.
Okay.
And then he was critical with Chinese financial regulators about how they do stuff and stuff like that.
Mm-hmm.
And it wasn't even really that negative what he said.
Mm-hmm.
But after he said that, nobody saw him for 2 months.
Wow.
And they were like, everyone's like, well, where's Jack Ma?
Uh-huh.
And it's like, that's kind of like what happens with China, and that, well, he's reappeared
Okay.
now.
And now he's like, China's great.
Yeah.
Forget what I said before.
Yes.
Yeah.
So that's kind of
Ooh.
kind of a problem with investing in China. Like
Yeah.
nothing against China or the Chinese people or anything like that. It's just that you have to understand the government system there is a little bit different from ours.
Yeah. Different. Very
Yes.
different.
So it's basically the CEOs are kind of scared of the government, where here, like, we just roll the red carpet out for our CEOs. We just give them whatever we want, apparently.
Yeah.
So it's like, it's just a different way of doing things, right?
Okay.
So it's like,
But you do like China.
yes, yes.
Okay. All right.
Well, there's massive growth potential. I mean, well, already China's growing in the last few years, like
Uh-huh.
in the last decades. Crazy,
Okay.
right? So you still want to invest in China,
Okay.
but I'm just saying, like, if picking a single company in China is kind of risky,
Right.
especially because it's a world away. Like we don't have like here, if we're investing in companies in Canada, we're investing in companies that we're using all the time, right? We have no idea what's going on in China.
Right.
So I think like a better way of investing in Chinese, or like the Chinese economy, is buying an ETF
Okay.
that tracks all of China.
And the ETF would be better because it's comprised of Chinese companies. It doesn't originate in China.
It's managed by someone here.
Okay.
And so, like an example would be ZEM. That's managed by the Bank of Montreal. And so they go out and they'll buy the Chinese companies.
Okay.
But they're also like, it is an emerging market ETF. So
Okay.
they're gonna buy Chinese companies, but they're also gonna buy Indian companies. They're gonna buy Brazilian companies and South African companies. So in the developing world, people say in the next 10, 20, 30 years, a lot of growth is going to come from those developing markets.
Okay.
As those markets develop. So you want to be a part of that action, right?
Right.
So I just think like instead of trying to pick single companies that might do well there, it's just better to buy an ETF that tracks the whole economy there.
Okay.
It's just way less risky.
All right.
And my recommendation would be to make about like 5 to 15% of your portfolio could be dedicated to emerging markets.
Emerging markets.
Yes.
Okay.
Okay.
All right.
Cool.
Yeah.
So let's move on to. So we got at Stryker, we placed Tesla.
Okay.
Yeah. So Tesla really doesn't need any introduction, but so Tesla, they make very popular electrical vehicles.
Very popular.
Yes, and they're also working on robo-taxis, energy storage, and solar power.
Okay.
So,
I like all that.
Yeah.
Those are all good things, right?
Yeah, and they're run by Elon Musk, who's brilliant. Like
Yes.
he's a very smart guy. So let's go look at their numbers.
Okay.
So in the last 12 months, they had revenues of $31 billion.
Okay.
Good.
That's good.
And they had a net income. They made a profit of $690 million.
Not bad.
Yeah, okay. It's good. It's
Okay,
good. Okay.
alright.
And they're valued at around $600 billion. So their price to earnings ratio, like, do you understand? You know price to earnings, right?
I have a very limited understanding of price to earnings ratio. I understand, and tell me if I'm wrong here, that if it's high, that's not good. You want price to earnings ratio to be low.
Yes.
Okay.
So basically, price to earnings is basically you're taking the market cap. So in Tesla's case, the market thinks they're worth about $600 billion.
Okay.
And you're going to divide that by the profit that they made.
Okay.
So they made about $690 million in profit.
Okay.
So that basically works out to a price to earnings ratio of 966.
Which is very high.
Very insanely high.
So when you see a high price to earnings ratio, does that mean that the company is overvalued, that the stock price is overvalued? Is that what that means?
Yeah, it makes it, or it's overvalued, or basically there's a lot of assumed growth already baked into the price.
Okay.
So everyone who's buying into Tesla, they're assuming that Tesla's going to like basically run the world in the next 5-10 years, right?
They might. Do you think they might? Or no?
Well, I can wait. I don't know. But it's like, okay. And that's given even that high valuation, their shares are still down 31% since February 2021.
Ouch.
Although, to be fair, in the last year they had a huge run up as well.
Right, but that's just because everybody was buying them.
Yeah,
right?
but if you bought Tesla at the height,
yeah,
now you're down 30%.
30%. Right. Yeah. Okay.
So I guess the point with Tesla is like you have to understand, like, even if you're buying into great companies that are making great products, they can still be overpriced.
Okay.
So it's like you can't just buy stuff, and without considering how much it costs. So imagine if you go into the grocery store, right?
Yeah.
And you saw pasta's $200.
Okay.
And you're just like grabbing pasta off the shelf. And like apples are $300.
Okay.
And like toothbrushes are $500. And you're like, well, I need toothbrushes, so let's get five toothbrushes. Right? It's like that would be ridiculous, right?
It would.
Because you know that toothbrushes are not
Yes.
worth $500.
Right.
So you have to look at companies and you actually say like, well, is this company worth what I'm buying?
Okay.
Right? So like a Warren Buffett quote. Like Warren Buffett, like one thing that he says is that the price is what you pay and value is what you get.
Okay.
So the price of Tesla right now is $600 billion. That's what the market is pricing Tesla at. But what you're getting is a profit of $690 million.
Okay.
So it's just,
You're not getting what...
you're not getting value.
Right.
Like compared to like other companies. So, okay, so you've heard of Kathy Wood, right?
Yes.
Kathy Wood is,
She runs an ETF.
She runs an ETF called ARK Invest, and one of her largest holding is Tesla.
Okay.
So basically, she's a very popular fund manager in the last year, and her fund has exploded in value recently because she made big bets on Tesla and Bitcoin and that kind of stuff.
Okay.
But like she came up, so this is basically after Tesla had this. Their share price has gone down like 30%, and then just recently she came up with a prediction. She said that by 2025, she thinks that Tesla is going to be a $3 trillion company. So basically she's saying like, no. Tesla is not overvalued, it's actually grossly undervalued. And it's like, well,
That doesn't seem to make any sense.
no, we're not even like talking about reality at this point. Because I know like Kathy Wood's, her job is to protect her fund, to protect the people who are invested in her fund.
Right.
So she's going to come up with saying yes, she's going to promote Tesla. But like our job as investors we have to look at what she's saying and then saying, well, does that make sense to us? And if you look at the numbers, like what like the underlying assumptions that she's making, she's basically saying that she thinks that Tesla's going to grab a massive market share in cars, in like all the cars that are being sold. And she's basically saying that Tesla's going to monopolize robo-taxis, like an industry that actually really doesn't even exist right now.
Yeah, and I don't think it is going to exist, but yeah, that's just me.
And it's just like there's too many ifs and maybes.
Yeah, right.
With Tesla to justify the current price,
Right.
even if it's a great company. So it's like as investors we have to look at that. Like
So would you say that she is just doing what she has to do to keep the value of her ETF up?
yeah, but like you can't really pay too much attention to what she's saying.
Yeah.
Like we have to like make up our own minds. Like we have to look at look ourselves.
Someone can tell you what the weather is, but you just have to stick your head out the window and kind of just see which way the wind's blowing, right?
Yeah.
Right. Okay. All right.
So like I think bottom line of Tesla is like great company. We're not really quite sure yet if it's going to live up to the hype. Right.
Right.
So let's move on.
Okay.
So at right back,
Yeah.
we have non-fungible tokens.
Okay.
So do you know anything about NFTs? Basically, that's what they're called, non-fungible tokens.
I do know a little bit about NFTs.
Okay, well, what do you know about NFTs?
Well, I know how NFTs relate to the art world. I know that. Okay, so basically, if I make a picture, a digital work of art, I can mint an NFT, and that will put it on. I'm not sure if I'm using the right. If I'm phrasing things properly, but that'll put it on the blockchain, which is a ledger, to show who owns it.
Yes.
And then every time it changes hands from that point, I, as the originator of the NFT, will get a royalty, and it just basically authenticates that one thing. It makes it a unique thing. Yeah.
Yeah, honestly, we don't really know how it's gonna work because it's like a brand new thing, right?
Yeah.
Because it's like a lot of stuff, like a lot of the artwork is like you're not getting royalties from it. You just have ownership, but it's like you're not like. Let's say you own a piece of art.
Yeah.
you're not necessarily getting any royalties from that.
Well, if you were to make prints and postcards or whatever, you would get royalties off of that, right? Every time it's reproduced.
Yeah.
Yeah.
Maybe, but the way I look at NFTs, like, okay, like, you know how, okay, maybe like the people like your wife maybe gets upset with you if you're spending too much money on sport cards and like Magic the Gathering cards, right? Because I like Magic the Gathering cards.
Okay.
But wait till you tell your wife that you just spent your kid's college fund on digital versions of those cards.
Okay.
That's basically what an NFT is. They're digital versions of artwork or sport cards or Magic the Gathering cards or anything, basically, right?
Yeah.
But I guess my point is like, and it gets to the point like we have to look at as investors, we have to look at what's a speculative asset and what's a productive asset.
Okay.
So a speculative asset like an NFT, it doesn't actually produce any value on its own. It's only valuable if other people are going to pay you money.
If you can sell it.
If you can sell it to someone else.
Right.
Right?
Yeah.
Okay, so...
Which is what stocks are, though, aren't they? No?
No, not quite.
Okay,
No, okay, let's take that as an example, okay? So, well, I think, like, the stuff that I want to own productive assets, like, for example, real estate or businesses, because they're going to create either rents or profits.
Okay.
Okay, but let's take an example. Like, so we like Canadian Pacific Railway.
Yes, we do.
Yes.
Yeah.
Okay, so CP Rail in the last year, they made $2.5 billion in net income. Okay?
They netted that.
Yeah.
Netted it. Okay.
So let's say hypothetically that we're the only two people who want to own CP Rail.
Okay.
And the share price just absolutely tanked. Like it lost like 99.9999% of its value. And we're the only ones who want to own CP Rail. Would we be happy?
No.
Well, no, I would say we'd be through the moon happy.
We would be?
Yes.
Okay.
Because the company's making $2.5 billion and we're the only ones who own it.
Let's go back. Let's go back and ask me that question again.
Okay.
Because I blanked out. Okay, go ahead.
No, think about it. Okay, so CP Rail makes $2.5 billion.
Okay.
And right now, all that profit is shared by all the shareholders that own CP Rail.
Yeah, so we would want to be the only two people.
Yeah, if there was like a magical world that happened, like, and we woke up one day and we were the only ones who owned CP Rail,
right?
We would be the happiest people in the world, I think.
Yeah, yeah.
Because every year we would be making $2.5 billion.
Right.
Right.
Yeah.
But the thing is, like, that's never going to happen.
No.
Because people value companies that make a profit.
Okay.
And that's the difference between having a productive asset and a speculative asset.
Okay.
Like a speculative asset is like you have to go out and actually sell it to people. Like a productive asset is just basically we just sit here and it just makes money.
Okay.
Like we don't even have to we don't have to have any association with CP Rail. We don't have to like actually go on the train and like drive it.
Yeah.
It's just making money, right?
The tracks. Yeah.
Yeah. So that's where we want to be.
Okay. But an NFT on the other hand is what, like,
it's a speculative asset.
Okay.
Yeah. So like, let's describe it like let's look at gold. So gold is another speculative asset. So if we have like gold bar right here, it's not going to do anything. It's just going to sit here
until we sell it to somebody.
Until we sell it to somebody else.
Values it.
Okay. So let's say we own all the gold in the world.
Yeah.
And nobody else in the world wants to own gold.
Okay.
We got big problems. Because
what are we going to do with all this?
Yes, like because we have nobody wants to buy our gold,
right.
So we're just stuck with a whole heap of gold, and it doesn't really do anything.
We have to store it.
Yes.
Okay. Yeah. All right. Okay.
So that's the difference. So it's like, really, do I want to own NFTs? No, I'd rather own businesses that make profits.
Okay, so that's fair. That's fair. That's fair.
And
you want to be the person who's selling an NFT, though, maybe.
Yeah.
Who's
like, okay, the way you want to think about NFTs, like they're fun. They're collectibles.
Okay.
Like I like buying Magic the Gathering cards.
Okay. Yeah. Right.
But I'm not looking to make money off of Magic the Gathering cards.
And you wouldn't bet your life, your future on a bunch of sports cards, right? You wouldn't, or Magic the Gathering cards. You wouldn't make that your retirement plan, right?
I would hope not. That was like it's, and so it was like a crazy story I told you about. It was like, did you know that? Yeah, someone in Toronto paid $600,000 for a digital house.
Yes, you told me that yesterday, and so I couldn't wrap my head around it. So the only way that this person can, this is like a Minecraft kind of house, right? It's more sophisticated than that, but the only way that you can experience this house is if you put on VR goggles. And, okay.
And then I guess you can sit around your friends in this virtual reality, and then somehow this costs $600,000.
$600,000.
Yeah, so that's something like that. That's a fun thing, right?
Mm-hmm.
But it's that I might pay $20 for it just because it's like a fun thing to kind of experience. But like to call that an investment is crazy.
Yeah, I don't get that.
So I think the point with NFTs that we're trying to make is like you have to, like, as investors, we have to separate speculation from production.
Okay.
And we want to be in production.
Yes. Okay. Yeah.
So who do at left back? So left back, we've got Hive Blockchain Technologies.
Okay.
Okay, so they're basically a cryptocurrency mining company, and they have operations in Canada, Sweden, and Iceland.
Okay.
Okay, so in the last 12 months, they made $53 million in revenue, and they had a net income, so they had a profit of $29 million.
Okay.
So they're making money, and they're valued at $1.4 billion.
Okay. And all they do is mine cryptocurrency.
Yeah, so I think mostly Bitcoin and Ethereum.
So this would be, mining would be, like if I bought crypto years ago and forgot about it and it's on a hard drive somewhere, like explain that to me.
No, so mining is basically, there's new Bitcoin and Ethereum being created.
Okay.
So Hive is basically, they have their computers, and they use their computers to run the blockchain.
Oh, okay.
And so that their computers are solving all these mathematical equations that make the blockchain operate. And as a reward, they get new Bitcoin and Ethereum and crypto.
Okay.
So that's kind of their reward.
So what's wrong with this?
Well, it's not that bad actually. It's okay. So their shares are down 43% since February 21.
Why are they down 43%?
Well, I mean, I guess there's like a lot of hype around them, and and there's a correction, I guess.
Okay.
And so if you think about it, like if you looked at the rest of our team that we set up, this might be our MVP.
Okay.
But
that's not saying much.
No, it's not saying much. So it's a profitable company, and it's a productive company. So they're making money, and they're producing Bitcoin that people want to buy.
Okay.
So we're on kind of the right track where we're making stuff that people want to buy. But I think the problem with Hive is that it's linked to crypto.
Okay.
And crypto is highly volatile, and really it doesn't have a long track record.
Right.
So I just think if you're going to have like a mining company, you want to have a mining company that is mining stuff like gold or nickel or lithium or something that has a longer track record and that people actually use, and there actually has a utility to it.
Yeah, because I still don't know. You still can't go to the store and buy anything with your cryptocurrency, right? It's changing, right? It's changing.
Yeah, I mean, and it's like, I think with Bitcoin, there's like 100 million people right now who hold Bitcoin. But if you compare it to like all the people in the world, it's still a tiny fraction.
Okay.
And it's not. Yeah, it's like, I mean, compare it to like if you like a mining company, like right now, especially with like the electrical vehicle craze that we have, and we're saying like, yeah, the future is definitely moving electrical, right? So wouldn't you rather, instead of having a company that's mining crypto, wouldn't you rather have a company that's mining nickel or lithium?
Yes, yeah.
That's
used in the batteries and
yeah.
Okay.
So it's like they're mining stuff that people, there's there's a use for it and there's a huge demand for it, right? That's the kind of stuff like I would want to be investing in.
Okay.
Okay, so now we move to central defense.
Okay.
So central defense, we got AMC Entertainment.
Okay.
So AMC, they're a movie theater company, and they're founded in 1920. They got about 1,000 theaters worldwide with 10,000 screens.
Okay.
So, but in the last 12 months, they had revenue of 1.2 billion, but they had a net loss of 4.5 billion. So not so good. But of course, like with the pandemic, you can kind of understand that they're not gonna have the revenue. They're gonna have a loss.
Yeah.
But AMC has been losing money for several years, so this is not. It's not as if like they just started losing money just because of the pandemic. They've been bleeding money for years now.
Okay.
And they have a market cap right now of $5 billion, and their shares since 2017 are down 71%.
Hey.
Yes. So, but
I bought it.
yeah. So the reason why we want to talk about AMC is like it's one of those popular stocks that everyone's kind of like
That's
trading and buying right now.
That's why I bought it. Yeah.
Yes.
I thought I was gonna get rich and retire on AMC.
Yeah. So, and the point is like, okay, like when we're as investors, when we're looking at companies that we want to buy into, we want to be investing in companies that have positive earnings and cash flows right now, and are going to be doing that into the future. Okay, and in AMC, like, it's questionable, very much questionable.
I mean,
right?
the industry could come back, but then you have to ask, why were they losing money for the last 3 years, right?
Yeah, well, because everyone's switching to home theaters. Like people just aren't going to movie theaters anymore. So like when you're buying companies, you actually have to look at what's going on in the industry.
What is the exchange of value, right? Like, yeah, I know for myself, I didn't really like going to the movies anymore because you get somebody with their feet up on your chair or kicking your seat or talking or on their phone or yelling at the screen. It's just not an enjoyable experience.
And it's so much easier to just watch the movie at home now.
Yeah.
Because especially with all the streaming services and then also with the pandemic, there's been production companies who they're just bypassing the theaters altogether. They're just going straight to streaming. So I mean there's a lot of tailwinds with the theater companies right now. It's probably something that I want to avoid.
Right.
But that doesn't mean that if a company showed a loss for a year that you shouldn't invest with them.
Okay.
What I'm saying is that if a company had a loss, so there's a lot of companies that posted a loss in 2020. That doesn't necessarily mean that it's a bad company to invest in. Like what you have to do is you have to actually look at the company and say, why did they make a loss? And are they going to make a profit in the future?
Okay.
So like a good company is Disney. So Disney posted a loss in 2020. But
it happens. It
yeah.
happens.
But we know that Disney's made money in the past, and we're pretty sure like once the pandemic is subsiding and all the parks open up, they're going to make money in the future.
Yeah, and they're not just the parks anymore, right? They just launched the Disney Plus streaming service last, what was it, October? So, I mean, yeah, they're...
And another one would be Air Canada, or like an airline, right? So Air Canada's, in 2019, they were very profitable. 2020, the pandemic happened, and they're losing lots of money. And you think, well, maybe they're not a good company to invest in. But if you look at like everyone, like there's so much pent up demand to go out and travel. Like as soon as travel restrictions are going to be lifted, everyone's going to be packing airplanes to go out somewhere. Right. And it's a big difference between Air Canada and AMC because people have home theaters, but they don't have home airplanes.
Not yet.
So it's like, so if you want to go to New Zealand, you can't just like, you just can't just hop over to New Zealand. You have to go onto an airplane. So that's why, just because a company loses money for a year doesn't mean that it just completely cancels them out. Right. But you have to look at the overall industry.
And you have to look at the circumstances, what happened during that year, right? Which is,
But
should be self-explanatory.
Yeah. But overall, I think like with theaters, we're just seeing a downward trend for years now. Okay, this is not just a 2020 thing.
Okay.
So that's why I would recommend.
I gotta drop my AMC.
Yeah.
It's not coming back, right?
Well, I don't know. Maybe you get a little price uptick once everything opens up, but
then drop it.
yes. Yeah. Okay. So the other essential pairing defense, the other essential defender we have is GameStop.
Okay. All right. Yeah.
Yes.
All right.
Okay. Yeah. Okay. So GameStop is a brick and mortar video game store with almost 5,000 locations, and they're trying to switch to be an e-commerce focused retailer. So their numbers in the last 12 months, they had $5 billion in revenue, and they had a net loss of $215 million.
Okay.
And the last time they showed a profit was in 2018.
Okay.
They made a profit of $34 million in 2018.
Okay.
And their share price since 2017 has fallen 92%. But then they had this crazy, in 2021, just like the last few months, they had this crazy short squeeze, and their shares have been going all over the place.
They've been probably the most volatile stock on the market, right?
Yeah, well, in a matter of days, their stock price went from $2 to 400 something.
Right.
Because of this short squeeze that happened. So the short squeeze was basically there was hedge fund managers, like big institutional investors, and they were betting against GameStop, thinking that GameStop was going to
go out of business.
Okay. And they were going to bet against it so that they can make some money. And then all these retail investors on Reddit, they're like, well, you know what, we're just going to buy GameStop. We're going to shoot the price up. And basically so all those people who are betting against GameStop, they lost tons of money.
Right.
So that's kind of like
all the people who shorted GameStop.
Yeah.
Lost money. Okay.
But like right now, like with GameStop, like if you're an investor right now in GameStop and you're looking to invest, like it's hard to make any sense of the numbers because they're just all over the place. Like you just like don't know what's going on.
Yeah. One day it's at 116, the next day it's at 325.
Yeah.
It's like
and it's people just using it to like trade, and it's like, okay, it seems like people are having fun doing this stuff, like trading stocks, and it's like fun, but it's like, and you know, and a lot of them they're thinking they're like sticking it to the system. They're like, oh, I'm gonna buy GameStop and it's gonna cause these hedge funds to lose money and stuff like that. But realistically now, I think all these hedge funds are completely out of GameStop.
Yeah,
so
they've made the necessary adjustments.
But it's like, okay, something like GameStop is like, okay, when I'm investing in the stock market, I'm not doing it for fun.
No, you're not doing it for kicks, right? Thrills. It's not entertainment.
Yeah.
It's your life. Right?
So if I want to have fun, I'm going to play soccer, I'm going to play Magic the Gathering or something like that.
Okay.
Like, and it's like, and to me, like investing is business.
Yes.
Yeah, I'm not going to mix fun with business.
No.
So it's like that's why personally I just stay away from stuff like GameStop. I don't even get involved with it. And it's like you can do that, but I think there's a risk of that. Even if it works out, you're just basically going to get off track from your game plan. So that's why I just don't recommend people doing it. But I think you have a personal story with GameStop, though. Is that?
Well, yeah. I mean, I thought that I could make some money quickly with GameStop, so I bought it, and as soon as I bought it, it went down badly. So I thought, okay, I could sell it and just cut my losses, but I thought, okay, what if it comes back, right? And then it did come back, and it went up, and then I sold it. I got out of it, and I made some money. So I got out ahead. That was great.
But like, how was your feeling? So basically, the next morning when you woke up and just instantly you were down like 40% on your investment. Like, how did that feel?
It made me sick. Because it was money that I had worked hard for, right? And I probably shouldn't have done that with it, but I did that, and yeah, it was just an awful feeling.
So I'm glad it actually worked out for you. You actually made some money off of it, which is good.
Yeah, I made a little bit of money.
Yeah.
And then, stupid me, I did it again because I saw how volatile it was, and then made money again. But it was not fun because you're checking it like every minute, it's every hour. It's like, what is this doing? You know, You just want your portfolio to be made up of just solid companies that are growing. You don't want to have to. I don't even think you should have to check your portfolio every day.
No.
Just be confident that it's growing over time.
No. Ideally, I really shouldn't really have to check your portfolio at all. I mean,
Right.
It's like, because it's like,
Just buy and hold.
yeah, you're just if you're investing in good companies, like, you know those companies are doing well. So it's like, really, why do you have to like keep checking on what the price is, right?
Mm-hmm.
So it's like, in your case, okay, I'm glad in both cases you made money off of your trade in GameStop.
Yeah.
But that doesn't mean it was a smart decision.
No, it was
to-
not. I know
to
it was
invest.
not a smart decision.
Okay.
It was not a good decision
Yeah.
at all. Yeah. It was a bad decision.
Okay, so moving on. So we saved this one more to the last. Okay, so at defensive midfield, we put Bitcoin.
Okay.
Okay, this is going to be controversial.
Yeah, it is. Yeah,
It's
because
like-
there were a lot of people out there who were just bananas over Bitcoin, and there are a lot of people out there who were making their whole YouTube lives off of Bitcoin. But go ahead.
Okay,
Yeah.
so like Bitcoin is, again, like we talked about with NFTs and gold and collectibles, Bitcoin is basically a speculative asset. It's something that it doesn't produce anything on its own. So really, that's the reason I wouldn't want to have involvement in Bitcoin. And it's like, for a lot of people, like right now, it seems like, well, it is making money because it's going up in value. But understand, it's only going up in value because other people are buying into it.
Okay.
It's not because Bitcoin is doing anything.
Mhm.
That Bitcoin is not producing anything that people want to buy.
Is that the same way that pyramid schemes go up in value because more people are buying into them?
Well, yeah, that's what people think Bitcoin is a pyramid
Okay,
scheme.
alright,
It's like,
okay.
well, people, like, if you tell people that, they'll just rip your head off. But
Right.
it's like,
It's becoming like a religion, right? Like
Yes.
cryptocurrencies are becoming almost like you can't say anything bad
Yeah.
about them to certain people.
so I've like, in my Facebook feed, I've posted some stuff warning people against Bitcoin because like I noticed on my Facebook feed there are people who are investing in Bitcoin and they're excited about Bitcoin and stuff like that. And it's like, I know these people and I know they have no clue about finance, right? So it's like, I know you guys don't know what you're doing and I'm trying to warn them and they're not listening to me, but it's whatever, it's their money. I don't really care. But
Yeah.
but it's the reason why I don't own Bitcoin. And I think if we want to get into the pros and cons of Bitcoins, like we can basically have a whole channel devoted to that. But I think like it's useful to look at, so who are the people that are promoting Bitcoin and who are the people that are warning against Bitcoin.
Okay.
So I went and I did some research. I came up with 3 people who are Bitcoin promoters.
Okay.
So we can go over that.
Sure.
Let's talk about Michael Saylor. Do you know Michael Saylor?
No.
Okay. So Michael Saylor is the CEO of MicroStrategy. And that's a software company that has been buying and promoting Bitcoin lately.
Okay.
Okay, so he had a software company on on the New York Stock Exchange that nobody cared about, and he basically goes on his interviews and he whines that nobody cares about his company. And in the past, he was against Bitcoin.
Okay.
But then I guess he decided that, well, actually, this is something that people are interested in, so he started pushing Bitcoin and promoting it, and his company started buying Bitcoin. And since he did that, the share price has gone up 1,200%.
His software company.
His
Sure.
company.
Okay. All right.
So his company was buying Bitcoin. Right?
Okay.
So it was shot up crazy,
Mm-hmm.
but unfortunately, if you bought at the top of that craze, you're now down 53%.
Okay.
Off of that, right? So Michael Saylor, like I've watched a number of his interviews, and he's kind of like for a lot of guys who are like getting into the market, or like they're new to finance, right? You might watch a Michael Saylor interview and you're thinking like, oh yeah, this guy knows what he's talking about.
Okay.
But I feel like for someone
not like us.
yeah, but like for someone who has some history in finance, you can tell like he's just talking gibberish.
Okay.
Like, it just doesn't make any sense. But like one thing he says is like that he says that Bitcoin is a better asset than land.
Oh. Why? Why does he say that?
Well, because he's promoting Bitcoin. but that's nonsense. I mean, wouldn't you rather have have like actual physical land and real estate than a digital thing just floating around. I mean, it's just. But,
Yeah, totally.
okay, and then so the other thing with Michael Saylor is like it seems that so he's a billionaire, right?
Okay.
It seems that his biggest fear is having to pay income tax on his Bitcoin because he has all this Bitcoin, it's going up in value. So he has this elaborate plan where he's going to borrow against his Bitcoin
Okay.
so that he can get some value out of his Bitcoin, but he never has to sell it. So he'll never have to pay any taxes on that. So basically he's a guy who he's saying, I'm a billionaire and I want to profit from all my wealth, but I don't want to contribute anything to society. So that just kind of gives you a clue of who Michael Saylor is.
He sounds like the kind of guy that Warren Buffett
Would
detests.
not, yeah.
Right,
So Warren Buffett, I watched like one of his shareholder meetings, and he was basically saying like, yeah, like call us crazy, but we don't mind paying taxes.
Right.
So I mean, that's
why wouldn't you? Yeah.
yeah. And he was basically talking about a guy who he had an example of a guy who he made a lot of money in the U.S.
Mhm.
He went to some small island somewhere,
Yeah.
and then he convinced the government of that small island to make him an ambassador to the United States,
Right.
so that he could live in the United States, but you wouldn't have to pay any income tax.
Yeah.
And Warren Buffett's like, well, like what is that? Like, that's not a guy that I'm going to be looking up to, right?
No.
So that's Michael Saylor.
Okay.
So let's move. So the second person I came up with was Susie Orman.
Okay.
So do you know Susie
No,
Orman?
I don't know. Yeah. Any of these people.
So Susie Orman is a financial guru, and she basically preys on soccer moms and people who watch Oprah.
Mm.
Okay. So, and she's another one. She was pushing MicroStrategy.
Okay.
So Michael Saylor's company. She was saying, yes, buy Bitcoin, buy MicroStrategy, but she admits that she sold out of MicroStrategy before it crashed.
Okay.
So it was like, okay, well that's good for her, but
Right.
for the people who bought MicroStrategy at the top, you just lost half your money.
Right.
Like,
And
so
you gave it to Susie Orman, right?
basically, yeah.
Okay. All right.
So the thing with Susie Orman is like in the past, she got famous because she was pushing something called a prepaid debit card.
Okay.
So what do you think a prepaid debit card is?
A prepaid debit card is a debit card that already has money on it that you have paid for.
Yes.
Right.
So how is that any different from a regular debit card?
Because it is money that
So what is a debit card?
A debit card is you debiting your checking account to pay for things.
Yes.
Right. Yeah.
So
So
is there such thing as a post-paid debit card?
no.
Yeah.
No.
So all debit cards are prepaid debit cards.
Right. But these would have been different because there was a fee associated with.
Okay, so basically what she was saying, like she was marketing this nonsense, and
Yeah.
it was basically for people who were coming out of the financial crash.
Right.
There were people who they got into financial trouble and they didn't have good credit.
Okay.
So she was saying, well, I got this card. It's called a prepaid debit card, and you can use this card.
I know that people
Yeah.
after they declare bankruptcy or what's the other one?
Consumer proposal. Yeah.
They'll use prepaid credit cards.
Credit cards.
Right.
But not a prepaid debit card.
No, okay,
Yeah.
all right.
So
Okay.
she was pushing this prepaid debit card, and she was saying, yeah, you can build your credit back up by using this.
Okay.
But the problem was like these cards, they were loaded with all these like hidden fees.
Yeah,
So
yeah,
she was like
right.
profiting from all of this.
Yeah.
And it's like people were like, they were going on TV and saying like, I don't know what this woman is talking about. Like,
Right.
you can't build your credit by using a debit card.
This is pure shyster.
It's a scam.
Right.
It's a scam. I mean,
Yeah.
that's exactly what it is. But
It's preying on people who got into financial trouble because they didn't really understand how personal finance works, and it's kicking them when they're down, basically, right?
Yeah.
Yeah. Okay.
So I mean that's kind of like how, unfortunately, like some in America is like, well, if you want to scam poor people, they'll put you on national television.
Right.
They'll just like they don't care. It's like, how is this woman like? Do you think like to even utter the words prepaid debit card, you would think you would just be a laughing stock.
Right.
But no, like you, it's like, no, go ahead.
I thought it was a trick. Honestly, I thought it was a trick question. It's just, yeah.
But it's like, okay, so that's Susie Orman.
Okay.
And she's also promoting Bitcoin.
Okay.
So it's, okay, so let's move on. So Kevin O'Leary.
Okay.
Yeah, so we don't, so in Canada, we know Kevin O'Leary all too well. Just like
He's one of the dragons, right?
yeah, so I call him Mr. Not So Wonderful.
Okay.
So, yeah, but he calls himself Mr. Wonderful. Yeah.
Okay.
So he's another big pusher of Bitcoin and crypto.
Mm-hmm.
But like Michael Saylor, he was originally against it, but then he was like, oh, well, it seems like people, I want to be part of the hip crowd, so I'm going to promote Bitcoin now.
Okay.
And like make money off of that.
Right.
So he's kind of like, yeah, he's like, well, I can see where the wind is blowing, so I'm just gonna. I'm not gonna care about truth.
Mm-hmm.
I'm just gonna do whatever is hip and
right.
is making me money right now.
Yeah.
So
I'm gonna capitalize.
So I think with Kevin O'Leary, like everyone kind of remember, like his first start would be Dragon's Den.
Mm-hmm.
Like that's where everyone thinks of him, right?
Yeah, but he was a businessman before that, right?
Sort of.
Well,
I mean, so he made his fortune because he had this software company. It was called The Learning Company.
Okay.
And he sold this company to Mattel in 1999.
Okay.
Okay. And that acquisition for Mattel turned out to be the biggest disaster one of the biggest disasters in history.
Wow.
So Mattel, after they bought this company from O'Leary,
Mm-hmm.
they lost $3 billion in shareholder equity in one day.
Oh.
And they ended up firing O'Leary.
Yeah.
And their shareholders sued them because it got found out that O'Leary was using accounting tricks to hide losses and inflate the revenues.
Oh my God.
So it's kind of, and this is all on his Wikipedia page. It's all public information. So it's like basically from day one,
Yeah.
Kevin O'Leary's a little weasel. He says he's the scam artist from day one. That's how he made his money. And then he goes on Dragon's Den and Shark Tank.
And everyone thinks he's this brilliant businessman. Didn't his wife just kill somebody? Like,
yeah.
Was she drunk or something? And
Oh yeah, on a boat trip. But that's kind of like when you're rich, you get drunk,
you kill
someone, you pay a fine, and you move on with your life.
Right.
And that's how it works.
It's their
Right?
fault. It's their fault for being in front of your boat.
Yeah.
Yeah. All right.
So the other thing with Kevin O'Leary, he's starting an ETF company.
Okay.
And he's called it O Shares.
Okay.
Yeah.
Okay.
So yeah. So it's like, iShares, right? iShares who you can buy good ETFs from iShares,
Mm-hmm.
or you can buy garbage ETFs from O Shares.
O Shares. Okay.
Okay. So O Shares, they're basically the same stuff. Like they're investing in basically the same kind of companies, except O'Leary charges about 10 times more from his product than you would get from like iShares or Vanguard.
Okay.
So he's just scamming people again.
Right.
This is and so like one of his advice that he says, you should not invest in companies that do not pay you dividends.
You should not invest in companies that do not pay you dividends. Okay.
Yeah.
But
So-
Berkshire Hathaway doesn't pay a dividend.
Yes.
Yeah.
So but he's basically saying Berkshire Hathaway is a bad investment.
Okay.
He's saying Amazon has been a bad investment.
Right.
And Facebook has been a bad investment. So it's like,
Mhm.
I mean, it's like,
It doesn't make any sense.
yeah, it's just because a company doesn't pay dividends, because a company might not pay dividends because they're saying, well, instead of paying out the dividends, we can reinvest that money into the company and we can make the company grows.
Yeah.
So it's like, I don't know, is he dumb or is he just basically scamming people? Like, I don't know. It's like I'm leaning towards scamming people.
Yeah, I don't think he's dumb.
No,
he's definitely not dumb. He's definitely a shyster. That's what it sounds like.
So like, when I was researching for this video, like I watched some of his YouTube videos because now he's trying to get onto. Well, he's making a presence for himself on YouTube.
Okay.
So
people are gonna eat that up because people. I don't know what it is. People just seem to like brash guys who just come out and say shit, say stuff.
Yeah, and that's Kevin O'Leary to a T.
Yeah.
And it's like if you're new to finance, you might look at Kevin O'Leary and say, well,
right, he's on TV,
yeah,
right?
and he knows what he's doing,
right?
He knows what he's talking about,
like people do with Donald Trump, right?
Yeah. So I watched a video of his, and he was just giving financial advice, basically telling people to buy Bitcoin and stuff like that. And he said that he thinks that by the end of 2021, the 10-year U.S. Treasury yield will be 10% by the end of the year.
Okay.
So do you know what the U.S. Treasury
No, I don't.
yield? Okay, so it's basically like the U.S. government puts out bonds.
Okay.
Debt, basically.
Mm-hmm.
And they're saying, so Kevin O'Leary is saying that the yield, the interest payment off of that debt is going to be 10% in
Okay.
2021.
That doesn't make any sense.
Do you know what the yield is right now?
I'm guessing it's going to be like, I'm going to say 2%.
It's 1.6%.
Okay, all right.
And so it's like, I watched the video and I had to rewind it a couple of times because I was like, there's no way that he did not say that he thinks the 10-year Treasury yield is going to get to 10%.
Right.
There's no way.
Uh-huh.
And I rewinded the video.
Uh-huh.
I was like, he is saying that.
Uh-huh.
And I looked at the historical charts. Do you know when is the last time that the U.S. Treasury got to 10%?
No.
1985.
Okay.
So I was a little baby
Okay.
when the last time the U.S. Treasury yield hit.
Okay.
Yeah.
All right.
And that was a unique circumstance. The only time is between 1980 and 1985 is the only time in history that the U.S. Treasury yield has gone above 10%.
Okay.
But that was like a unique time in history because in the 70s, the U.S., they shifted away from the gold standard and they went to floating fiat currencies. And there was inflationary pressure and the central banks had to raise interest rates. Okay, that's a lot of complex history.
Mm-hmm.
But the point is that to say, for anyone to say that the U.S. Treasury yield, and it's like, and I was looking at this like, okay, if I had the opportunity to bet my entire portfolio
Mm-hmm.
that, and you know, I'm not a gambler, right?
No,
No.
you're definitely not.
So if I had the opportunity to bet my entire portfolio that the U.S. Treasury yield would not get to 10% by the end of this year,
Mm-hmm.
I think I would have to take that bet.
Yeah, I would do that too. Yeah.
And again, it's only like 9 months from now, so we can come back and see who's right or wrong. And
Right.
I can pretty much guarantee you that I'm right.
How do you think he's going to explain that in 9 months?
He's not. He's not going to explain anything because it's like, and I was like,
What is he hoping to do? Telling people that
he's trying to scare people into thinking that there's going to be runaway inflation.
Okay. All right.
So basically saying, well, there's going to be runaway inflation, so you got to put all your money into Bitcoin.
I see.
That's basically what he's saying.
I see. Okay.
Yeah.
All right.
So it's like, that's the thing. Like,
Oh.
I know,
That's just
I know Kevin Leary is not stupid.
Right.
But I
he
know
knows exactly what he's doing.
He's a little weasel. That's what that's but he's another guy who's
This is criminal. Like it just seems
Yeah.
like it should be criminal, right?
yeah, he's another guy he's another guy who's promoting Bitcoin. Like that's the type of people that you have behind Bitcoin. But it's like,
Wasn't he talking about running for Premier of Ontario at one point?
Prime Minister of Canada.
Oh my
Oh, he did, but he got totally embarrassed, and that's another episode of in his life.
Mm.
But it's like, and then recently he went on he went on CNBC because for some reason he made bets against the airline industry.
Okay. Why would you make bets against the airline industry?
Yeah.
Like people can't wait. Like you just said, can't wait to travel.
So in the latest U.S. stimulus, there was support for the airline industry. So he goes on CNBC and he complains about the U.S. stimulus. So basically all these checks that are going out to people who need the money, he's like, no, I don't think that should happen because I'm going to lose out money
Right.
because I made a stupid bet.
Yeah.
It's like that's the kind of jerk he is. It's like, and he's just completely wrong. So I watched another video of him where he's on a boat in Miami.
Mhm.
And I was kind of scared because I was like, who's driving this boat?
His wife. His wife.
Like, I hope his wife is not driving this boat. It was like- and so he's driving, and he's like, oh, I'm so excited about investing in America 2.0. So America 2.0 is like basically he thinks that we're going to live in a world where no one's going to fly anywhere.
Okay.
No one's going to go around people.
Mhm.
Because he's like, nobody wants to go in an office and get into elevators or go to shopping malls and be around people.
Mhm.
And it was kind of funny because as he was saying this, he was on a boat
Mhm.
and there was a party boat going right behind him,
Right.
crammed full of people. Like it was just like the irony of just like he's basically proven wrong in his own video.
In his own video. Yeah.
But
But people love him. Like people really like him.
I think people who don't know what they're talking about
Right.
love him. But it's like, so my point with like pointing out these people is
Okay.
like, oh, so these are the people who like Bitcoin and promoting Bitcoin.
Mm-hmm.
The people who are against Bitcoin or warning people against is basically guys like Warren Buffett and Charlie Munger and Bill Gates.
Who-
So
Buffett and Munger, who have been around, have a track record that's just
Yeah.
like, wow, yeah.
and Bill Gates, who's basically using all his money to go out and help people and donating like basically all his money to charity.
Yeah,
It's
but
like
people still say that he's Satan and he wants to. Yeah,
well, whatever. But it's like you compare those three against Buffett, Munger, and Gates. There's like no question personally
No.
of who I trust more.
Right.
So, and it's like there's lots of other fundamental reasons to be against Bitcoin. We can get into that later. But just purely based on the people who are the clowns who are on the side of Bitcoin
Mm-hmm.
and the smart people who are against it, I have my mind made up. Like I don't know about everyone else, but it's like it seems to me like a no-brainer. But we'll see.
We will see. Yeah.
Okay, so we have one more player. So our last player at Keeper,
Our keeper.
arguably
the most important.
I would say so. Yeah.
Okay.
Yeah. We got Dogecoin.
Mm-hmm.
So it's like Dogecoin is a cute dog with fun memes. So
Okay.
you sometimes see them riding a rocket ship to the moon or something like that.
Okay.
so and it's okay. I mean, it's down 36% from its highs in 2021. It's like,
First of all, what is it?
well, it's just another cryptocurrency.
Okay, all right.
But it's a cryptocurrency, like
Okay.
unlike Bitcoin that has a set value. Like
Okay.
so, Bitcoin's never going to have more than 21 million.
Mm-hmm.
But Dogecoin has no limit. It's
Okay.
already past like there's billions of coins already.
Uh-huh.
It's just more and more just get created, right?
Mm-hmm.
And it's I don't know. It's like it's Dogecoin is something that like even crypto people think it's a joke.
Okay.
So it's like I don't know. It's like I don't even want to say anything negative about it because it's like whatever. But it's like it's
Mm-hmm.
it's a dog on a coin that's riding to the moon in a rocket ship. But it's like it's.
I don't know if I want to make that the cornerstone or it doesn't just
Yeah, not advisable.
Yeah.
But it's like that's our team. so that's
yeah. Right.
But like, well, yeah, so we're saying like okay, and we're gonna make a future video, or we're gonna actually put
We're gonna do the team that you want.
yes,
Right?
So we're gonna have like a proper team where you're gonna have competent people in Keeper and your defense, and you're gonna build out, and then eventually, like maybe you could have some companies that you're not quite sure about, but you're like, okay, maybe these companies are gonna grow.
Yeah.
Because I think, for example, we're thinking of maybe like something like Peloton and Bumble and Roblox. Okay,
yeah.
we can get into that, but it's like when you're building your portfolio, I recommend like you have to have a solid base as your defense.
Yes.
That's basically the whole point of the video that we wanted to make.
Yeah, because your portfolio is defending your life, right? That's your life.
Yeah, that's a good way of putting it. Yeah.
So
Okay.
yeah.
All right, guys. I hope you guys got a lot out of that.
Yeah.
Again, I'm Vic.
That was a lot to absorb, but
Yeah.
I'm Darren.
Yeah. And thanks for watching, guys.
Thank
Guys,
you. Yeah.
See you next time.
We'll see you next time.
Yeah.
Bye-bye. All right.
Yeah, that was a lot.